week in AMC. I know that's probably going to be what some people talk about. I did not get into any AMC. I'm happy that a lot of people made money off AMC. But me personally, I just this week was more of just buying into my same olds, my already positions that I always buy into. So bought into VOO, VXF, and QQQJ. Really just that's going to be my focus probably for the next, probably till the end of the year, to be honest, just kind of double up or double down, I guess, on those um, and watch the market, madness from the sidelines. But my biggest thing this week with, because I've had a lot of people ask me about this VXF ETF that I'm holding. So I don't know if anyone's on here that saw that and was wondering. I just want to take the time, I guess, to explain it. And maybe this is your first time hearing of that. So basically, a lot of people talk about VTI, which is the total U.S. stock market ETF by Vanguard. Over 3,000 holdings, and you're pretty much owning a piece of every single U.S. stock, publicly traded stock. Um, in this ETF. So I'm kind of taking the VOO coupled with VXF. And what that is VOO is the S&P 500 ETF. So, it's about a little over 500 holdings. And these are your, 500 largest companies in the United States. So basically any big company you can think of is probably in this. So, Amazon, Facebook, go down the list, 500, Apple. So that's your S&P 500. And that's what a lot of people base off of, when you see people tweeting about, and I do this as well, but you see people tweeting about, over the next, say you invest X amount of dollars a month for the next X amount of years at an 8% return. This is, what that would be. That is going to be based off of the S&P 500 more than likely, because since the 1920s, the S&P 500 has averaged 10 to 11% per year. And then you take away, inflation, it's around, 7 to 9% per year is kind of where you could sit. However you want to run those numbers. You want to be a little more aggressive, you go 9, 10. You'll be a little more conservative, you go, 6, 7. I like to stick in the middle at 8. But anyways, so that's going to be your VOO, which is the S&P 500. And that's great to have, right? It's consistent. Historically been consistent at, 10 to 11%. But being on the younger side, I'm okay with assuming a little bit more risk. And I know but in terms of, an S&P 500 versus a non, large cap ETF. So I, did some research a couple months ago and was just kind of seeing what I could do with this portfolio. So I ran across VXF, which is a Vanguard fund. And what this fund does is it's basically every other stock except for the S&P 500. So it's a great complement to VOO, where you get that small cap, mid cap, more growth stock type exposure, but it's in an ETF form, right? So you're not going all, individual stocks. So, and the reason that I like this idea rather than just going a simple VTI is because with VTI, your holdings are, set in stone what they're going to be. The percents, the breakdown are going to be set in stone. So, for example, Apple is X amount of percent of VTI. Well, it's going to be X amount of percent of VTI, and you're not going to be able to change that. And 82% of VTI is made up of the S&P 500. So basically, if you're investing in VTI, I have I have VTSAX for my Roth, but but 82% of VTI is VOO. So basically, you only have about 18% of your money if you're in VTI in these small cap, mid cap, growth stocks or just stocks in general. So I wanted to break it up and manually be able to assume more exposure into these small cap, mid caps. So instead of going, 82% VOO in this portfolio, I'm at about, I don't know what it is today, it was sitting at recently, but it's about, 65, 70% VOO and then the rest in VXF. So I can essentially create my own VTI without having to, buy individual stocks of thousands of companies, but just couple VOO and VXF. So that's kind of my plan with that, and that was my reason for doing that and splitting it up. And then, my favorite QQQJ. I talk about it every day. I buy it every single week. This is just a Nasdaq next gen ETF. So essentially, you've heard of QQQ, which is the Nasdaq 100. This is the second 100. So 101 to 200. It has about 106 holdings, but I like this ETF. It's it's hundred. Small cap, mid cap, mostly mid cap stocks in this fund. But I like this fund long term. I think it's young. I mean, it is young. It only started late of 2020 is when the fund opened up, but it's a young fund with massive potential with the holdings it has. It's in a way to get that growth exposure without having to, individually pick and choose different holdings. You can kind of assume that individual growth stock type investment without having to spend the time researching individual stocks and spend the time and the money going into these different stocks and trying to hopefully be right on your decision. So that's why I like QQQJ. So for the rest of the year, or anything like that. So just and I talk about, I tweet about it as often as I can to keep it focused in. But having starting is great. Getting that money in the market is great. But once you learn that trust and you build that foundation, then it's about getting capital in, right? Because compound interest is great, returns are great. But the beautiful thing is, as you get more money in there, that those same percent gains just become bigger and bigger because of the capital in there. So that's what I'm focused on this year, or excuse me, for the rest of the year, is just doubling down on my investments and contributing as much as I can to allow compound interest to really start to continue to take over and build wealth on the back end while I go out there and make some more money.
Awesome, man. Appreciate the steady in the waters, just consistency within those QQQJ, VOO. I think they're really important. The S&P's at all-time highs right now, so anybody who's been following the strategy, you're doing pretty well. While simultaneously really minimizing your risk. So always great to hear from you. I'm going to keep the ball rolling because we have a good amount of speakers today. I'm going to kind of juxtapose I guess the of less risk strategies, and I'm going to have Shark go next. Shark, would love to hear some of the trading that you've been doing this week. I'm sure it's kind of in a different light to what Decade Investor is doing, but still some really fascinating stuff.
All right. Yeah. What's up, everyone? Thank you for having me. So yeah, and I really loved what everything Decade was saying because I was able to learn a lot. I trade completely different though. I'll be honest with you. I am a trader that follows more the flow, and I'm a price action trader. Being a technical analysis trader, that's something that I follow on a daily basis. And this week's been awesome. I've had an incredible week. I've actually had an incredible past couple weeks with the market starting to come back and with volume coming back. But with my strategy too, I do sometimes make money on both ends. So I was making money on the other side as well, not on shorting. But what I will get into now is when I say follow the flow, I mean, I really go in and I look into option activity, right? And large option activity. That's what I like to follow. And I like to follow it more on a short term basis in the sense of a week to a day. I'm not going to get into AMC or even a lot of the Wall Street bet stocks, but our community made a bunch of money off that. I called actually a swing trade on AMC at 12, I think 1260 with my algorithm. And we had some people in the community hold that thing all the way up to 60. Now, I was never doing that with AMC. I was in and out every single day. But because I'm not going to hold something like that overnight, that's not really what I do. But I'll also get into a couple of my trades this week. So one trade that I did get into, and it was just a day trade that I loved, was the Etsy. I liked their their acquisition this week. And what I, I'm not going to say that I predicted anything. There's people out there that know a lot more than me and are educated, and I just follow the big money. If you go and you look under unusual options, or one person I follow, and I'll give him a shout out, is Whale, is the Whale Unusual Option Activity. He's a great person to follow, and he's somebody that I am a subscriber to. But I like to follow and see what's the big money doing, and I won't act on anything unless I see $1 million plus that somebody's put up on something. And that was one that we saw. And then another ones that we saw today that I called out early this morning was NVDA, DocuSign, and also we called Lululemon earlier today as well. There was some really massive volume option activity on the call side coming in. And what I did was I just followed the flow. When I go in every single day, I like to do a top-down approach. So I like to see what the major indices are doing. I like to see what the major futures or what our future indices doing, and then I like to see what our top sectors are doing. I don't really break it down as the spider index, but I like to break it down into specific, like what's semiconductors, what's EV doing, and for me, I like to follow the flow. So this week and even last week, everything's been hot, hot, hot. Volume's been there. And if I'm going to get into something, I'm going to allow volume to play for me, and I'm going to allow price action to play for me. I'm always looking at the MACD. MACD is huge for me, and the MACD histogram is something that I play every single day. So what I'm looking for on the MACD and the MACD histogram is basically I'm looking for when the bears are starting to weaken and when the bulls are going to take control. And when we have a crossover from our MACD to the signal line, that's usually my confirmation to buy. We had a lot of that going on today with NVDA and DocuSign. I mean, those two options alone today made me a pretty hefty amount of money. But like I said, everyone plays things differently. My partner that kind of does a little podcast with me as well. He is a long-term investor. He goes with fundamentals. He's been in App Harvest and things like that. And perfect example was last time I was on Wolf, I suggested App Harvest, which is 8 pph at $13. And I said that thing was probably going to run up to 18. And it did this week. And I went ahead and I sold. I am somebody that doesn't fall in love with any stock. I don't fall in love with any price point. What I'm falling in love with is my P&L every day. That's the really only thing that matters to me. I've been doing this for a while, and this is my full-time job. So when I come to the market, I'm looking to make money. I'm not looking to fall in love with any specific stock. And I also like to always, and I got taught this when I was working at my first trading firm, was follow the larger money. I worked at a smaller trading firm, so for us, it was smart to follow the large money. So I like to look at unusual options every single day. A cheap website that some people don't know about, it's barchart.com. It's a great website. It has so many useful tools. I'm not affiliated with them at all. It's just I pay for the service as well. But it's something that if you want to look at, it has very easy, unusual option activity for you listed out. And that's something that I go to every single day. So perfect example for next week, what I'm looking at from that list right now is Apple. There's a lot of out of the money call options up in the 130 realm and 140 realm that I'm liking. So that's one that I'm going to be looking at for next week. Another one that I'm going to be looking at, and we've been playing this all week, is Ford. Ford with the EV sector coming out hot and with summer coming out. I called actually to my community that I believe that Q3 and Q4 was going to pick up for the EV sector, especially Q3 with summer coming in. And Ford now releasing their new EV car or truck. I see a lot of call options coming in on around 17. So we called that out to the community when it was around 15, and people have been baking all the way up. And then another one is WKHS. There's been a lot of out of the money calls coming in for this one for next week, especially. And like I said, I'm just going to follow the flow. There's a lot of, large volume coming in. I'm checking it out right now, upwards into the 20s, 15s, 14s. And right now it's at 13. So that will be an option that we get into as well. Um, I trade a little bit differently. I know it might sound crazy because I'm not so much of a value investor. I do have my value stocks that I keep on half of my portfolio, but when I come to the market every day, I don't force anything. I have a specific plan. Every single day, I have my specific watch list that I create and my price targets that I'm looking for. And then I just play those. Some people think that you got to have a scanner. Some people try to look at what other people are doing. And I don't, I basically try to encourage everyone to find the stocks that you like, find the plays that you think are going to work, and then do the research, right? Go into the technicals, do your charting, and then also go and see what the big money's doing. What are the institutions buying at this point? And that's what I like to do, and that's what's been working for me actually for several years.
Love to see it. If anybody is interested in more of Shark's plays, make sure to check him out. He's posting them every single day. Also going to be on my space on Monday evening, talking more about technical analysis. And I actually see Katrina in the crowd, so maybe she'll come on that space too. I wanted to have you on one of the technical analysis ones, so this is the shout out. But yeah, appreciate everything you're doing, Shark, and we'll hopefully be collaborating on more stuff soon.
Thank you, appreciate it.
Of course. All right, keeping it moving. I was actually on the Contrarian podcast last week. It was very exciting. Chatted about a few different things, and I would love to welcome the Contrarian Investor Podcast to the space to chat about, whatever's been on your mind this week with the market.
Cool. Yeah, thanks. This is my first time doing one of these spaces, and actually first time I'm ever going to talk about my trades. So caveat here that nothing I say is intended as investment advice. I'm not in a position to dispense investment advice, and you should do your own research and make your own decisions. But as you know, if you've listened to the podcast, I like to basically look for situations before they kind of happen. And be it, certain black swans or certain things that are about to take off. And so the concern is, you want to get ahead of these things. So pockets of certain little things that can develop into something bigger, and also that nobody's talking about, and also the narrative and what people might be wrong about or short-sighted. It's kind of the whole idea behind contrarian investing is that the market is inefficient, especially in the short term, and that it gets a lot of things wrong on the short term. And to give you an example of this, a couple of weeks ago, when the NASDAQ was selling off, I threw a little money at a couple of these tech stocks that I was pretty keen on: Teladoc, Roblox, Rocket Finance, Airbnb, and DraftKings. I guess not all of those are technically tech stocks, but they're all things that I kind of follow. I've been following them for a while, and for me, like, I should also say that I don't trade. I invest and I hold for the long term. I don't sell anything until at least a year for tax purposes. And if something goes down, then I usually buy a little more. But I initiate positions very, very small and just nibble a bit, and then I start adding to them. The idea being that I'm becoming an investor in the company. I'm literally a shareholder in the company, and so I'm going to be along for the ride. And I usually like dividend stocks, but for these guys, I thought that the prices were, again, on the short term, that these were oversold. And so these have done quite well. I don't know about buying now, but Roblox is up like 35% since I bought it. The others are up quite a bit as well. Airbnb, I'm still a little underwater, but that's as of that was a couple weeks ago that I made those trades, as I said. But this week, what I was looking at is I saw a story on Saturday, and it was from the Wall Street Journal. And this is something that's kind of been out there in the news, but that people aren't really talking about as much as they should be. And it's about cyber attacks, right? And this Wall Street Journal, I'm sorry, did I say Saturday? It was actually yesterday. It's a ransomware scourge continues as essential services are hit. So these cyber attacks are now hitting infrastructure in the U.S. I think it was some ferry in Martha's Vineyard or something that was hit by this. And these hackers, whoever they are in Russia or China or North Korea, they're not going away. And I think that the companies, especially in the U.S., have been scrambling a little bit to get ahead of this stuff. And like I said, these there have been news stories, quite a few little news stories here. There was a big attack, a couple months ago. Every couple of weeks it seems there's a big attack, and some company gets hit, and the shares sell off. So I figured, what better way to kind of protect against this than to invest in some of these cybersecurity stocks. And I don't have time to look into all of them, so I looked into the ETFs. There's a couple of ETFs. Hack is maybe the most famous one. That's the BlackRock, the iShares one. It's iHack, I guess, IHAK. Okay, no, these are two different things. There is Hack, and there's iHack. But the one that I decided on was Bug. It's the Global X Funds ETF, BUG. And so just yesterday, I initiate very small positions. And keep in mind, these stocks, because of everything that I've been talking about, they have run up quite a bit. And so they probably are not cheap. But nevertheless, if we're looking at this as a potential black swan and a potential risk thing, and if there's a big cyber attack, like it could be ugly. I remember a couple years ago, I don't know if it was due to a cyber attack, but Bloomberg was down for like 24 hours. Maybe it wasn't. I don't think it was 24 hours. It was more like 12 hours, and it created all kinds of havoc. And so all it takes is for some big thing to be shut down, some power outage, and you're gonna see some pretty serious selling across risk assets, except for these cybersecurity stocks. And so, on the one hand, to protect against that, then also as these companies invest more in cybersecurity, I think that these companies, these cybersecurity companies, are going to continue to do quite well. And actually, this Bug ETF is down a bit from the highs. The high was right around $30 a share back in February. That makes sense. Yeah, maybe early March it looks like, and it's now trading around 27. And I think I got in at 26,670 or so. But I'm hoping that it drops so I can buy more. So in fact, I hope it drops a lot more because I bought a very small amount, and I'm very bullish on this. Again, nothing that I say is an investment advice. That's all I got. Like I said, I do not put these any of my trades in writing ever. In fact, I'm a little uncomfortable speaking to as many people here. So again, this is not investment advice. Do your own research and make your own decisions. But I have a podcast, a daily podcast, where sometimes I do mention trades that I'm doing and things that I'm seeing, and give you a shameless plug, and then I'll shut up. You can get that. That is a paid service. I have a daily, every morning I put out this podcast where just taking a look at markets and things that are coming down the pike and that could and should affect where things are going. And that's where I talk about my trades a little bit. But you can get that. All the information is on my profile on Twitter, Pod Contrarian, contrarianpod.com. Go there too if you want. And that's it for me. I'll shut up. Thanks so much for having me, Gabe, and good to be here. Thanks.
Pleasure having you on, Nat, and it was great being on your pod. And if anybody wants to check that out, I highly recommend it. I'm sure the link is in the Contrarian bio. All right, we're going to keep things rolling. Stock market news, often a listener on here, but back up here as a speaker. Busy week in the market. I'm sure you were posting a ton. Would love to hear about, any trades you did or anything that stood out to you.
Yeah, man, crazy week, even just with the 4 days. I always find it funny how much shorter it feels, take away just one day. But even this week, I don't know about anyone else, felt crazy with all the, meme stocks going on. So pretty much just to start out, I am a long-term investor. I don't really trade that much, although when I do, I'm truthfully not the best. I feel very confident in myself and my abilities as a long-term investor. It's proven itself. Trades have proven itself the other way. So I kind of got into the meme stock rally only a tiny bit. I bought BlackBerry calls. Bought them yesterday, 2 days ago, which were just for expiring today, literally 0.1% of my portfolio, nothing in there, just so I can gamble and have a little bit of fun. I was seeing it. I saw what actually signaled me for it was I started to see BlackBerry be talked about more on Wall Street Bets. I saw in here a little bit earlier, I think he left now an account called Swaggy Stocks, but that's where I get all that from. Seeing it in BlackBerry ticked above AMC for mentions yesterday. As for what I've been doing this week, besides trades, I've been just kind of adding to my long-term holds. As a long-term investor, I really believe in dollar cost averaging. So like when you zoom in on 1 week, most of the time there isn't really anything monumental. This week I added to MSGS, which is Madison Square Garden. Decent dip, just kind of a name that I've liked for a while that I feel like is at a decent price. And like the last guy said, not investment advice, not trying to do that, but just kind of what I liked. And then QCOM and Skyworks were the other two. I'm very bullish on semiconductors and kind of just the way I have my portfolio positioned. I didn't have them at the percentage I wanted to, so I have been adding to semiconductors a little bit. Maybe if my portfolio was exactly how I liked it, I wouldn't be adding to them at this point, but I do want to get them up there. Next, I am considering moving out on some trades that I've had. When I say trade, these are year plus trades that I kind of bought over time and accumulated, but still looking to move out of them. A couple are Foot Locker, Uber, and National Beverage. I'm just kind of, picking my times, dollar cost averaging out. I didn't sell any this week. I believe I sold a little bit of Fizz and Foot Locker last week or the week before that. But those are three names that I'm watching moving forward that kind of have been in that long-term trade bucket. And then a more short-term trade that I'm possibly looking of moving out of is Beyond Meat, BYND. I bought this, I want to say about a month or 2 months ago before it kind of, when the Wall Street Bets crowd kind of died down a little bit, and it's came back as a Wall Street Bets name this week. I want to say I'm up like 10-15% on it, targeting like 50%. But I'm going to move out of that. That's not a long-term name for me. I've been sticking tight in my biggest long-term names. Haven't really done anything with this week with them. So those are, just going to actually scroll over to my portfolio real quickly. But it's pretty much, it's Apple, Ethereum, Tesla, Facebook. Pretty sure Bitcoin's up there as well, but a little bit lower. I know NVIDIA is one of my top names as well. Sorry, and then with NVIDIA, I'm watching for their stock split, which the meeting where the shareholders voted was yesterday. I have not seen it come out if it was approved. I would be surprised if, they didn't approve the split. And with that, obviously, as a long-term investor, I do know that stock splits do not change the actual value of a company, but we are in a world where markets are not perfectly efficient, and I believe that what I've noticed the last couple of times is a big buy the hype, sell the actual event. So that could be a possibility for me looking to play that with NVIDIA, something like that. Another name that I'm actually considering moving out of is NRZ. It's a specific high dividend part of the portfolio for me. It is a mortgage company or a REIT. I'm considering trying to move that out and kind of consolidate that entire part of my portfolio into just QYLD, which is a fund that holds the NASDAQ 100 stocks and then sells covered calls against them, and then pays out monthly dividends from that. So that's something else I'm considering to do. And then last thing that I am watching for next week, is I have an Apple call right now. I believe someone was talking about it actually, but it's slightly out of the money now. I want to say it's like, let's go and look. Sorry. It is a 1:30 call. I bought it a couple months back, looking to targeting the event that's next week. I always get the names wrong, but like whatever the event is called, Apple has an event next week, and I tried to get a call that expired after that. So I'm watching for that, hoping that goes up short term. But yeah, besides that, I think that's good for me.
Awesome. Appreciate that, bro. That was a nice overall thing. And I feel pretty similar. Listen, like I've tried my hand with the trading. Some weeks it works better than others. My long-term positions usually do better. Crypto's a little bit all over the place, but I'll get more into mine. But I always appreciate the transparency and you kind of, sharing your position and what you're looking at, like how you find stuff. So that's really great. Thank you. All right. Did you want to say something?
No, I was just going to say thank you. I appreciate it. Sorry.
Yeah. And just to pause, to everybody that's listening, really, some quality content coming out of these speakers. I just recommend, while you're listening, take a moment, click into my speakers' bios, look at what they do. Luke hasn't gone yet. I'll get to him shortly, but he's almost at 7K. So if we could get him there, that would be fantastic. And just looking at the others, there's a lot of quality content here. But all right, real quick, special. I'm gonna have you go now if you're all good for that, and then I'll have Luke go after. Special situation is not just one of my favorite people to listen to on Spaces, so I'm glad you're back on.
Hey, thanks. I appreciate everyone's time here. So, I actually am relatively new to spaces. Ran a portfolio within Goldman Sachs Asset Management for a few years. Spun off and did my own thing. Currently managing, a large family office and some pension assets. There's a lot going on in the market today. I also publish a piece on specialsituationsresearch.com. Have different types of membership, whether it's macro or single name. None of this, again, is financial advice. I tend to just post about my own trading, week to week. I tend to focus on quarters, so 3-6 month time horizons, but also 2 to 3 year time horizons across single names, volatility, and arbitrage, whether it's like dual class share spreads, merger arbitrage, or convertible arbitrage. Also have a niche in preferred stocks. I think that this is a decent environment for preferreds, depending on what type of company you're talking about, obviously. And we've been on prior calls from a short perspective. We had talked about Trainline, which is a company in the UK that essentially doesn't need to exist by 2024, which was a 40% type asymmetric 2-month return. And more recently, sold out of Upstart with a position kind of with an 80 handle at 160. It looked like after the Motley Fool published, it's run up as shorts have covered today. Tellurian is an interesting name that is run by Sharif Suki, who essentially used to run Cheniere, which was the largest LNG export facility in the U.S. The idea is that with Tellurian, the company has the ability to take cheap gas out of the Haynesville shale, at $1 per MMBTU, process it for a couple of dollars, and sell it, it's a much cleaner fuel than coal, to East Asia, Japan, and Europe, where you can get $7 to $9 per MMBTU, for 10-year contracts. And each one of it signed 2 contracts actually very recently. The CEO literally told us he was about to sign contracts in February, so he's able to buy at 185. Stock's currently at 485, and has potential to rally to $10 to $15 a share if they sign 2 more deals. They're looking to go from, they're currently at 6 MPTA to roughly 16.6 MPTA. And it's not just signing the contracts, which is why it's an execution story, and it's a higher risk story, because they have to actually build the facilities, and they need financing to do that. So first they sign the contracts. These are 10-year contracts at $3 billion a piece. Then they have to build the facilities, and then over 2 years, once they have those facilities, they can export that liquefied natural gas. So it's an interesting play. I wouldn't recommend it as a large position for someone who's new to investing. Some 2 plays that are a little bit more, have a margin of safety and are lower beta. One is actually called Ladder Capital. It pays a 7% dividend. It is actually a company where I know the CEO, who's the head of real estate at UBS for over 15 years, has about 30 years of experience. He does essentially 2-year loans to multifamily properties, $20 million loans, which is a niche because it's too small for Blackstone, but it's too big for some of the smaller banks that work in the space. So they lend at like a high single-digit debt yield. The company is trading at over a 20% discount to the undepreciated net asset value, or what REITs call a book value. And 99.8% of the loans are paying over, this is many hundred loans. They have a $2 billion loan book. They also have $1.2 billion of cash. They are deploying $300 million a quarter this year, which will be accretive earnings. And they have some very expensive debt that they're going to refinance. When they refinance that debt from the Koch brothers, that's a 12% debt piece, they will refinance into a 5% cost of debt, and that will essentially accrete 20 cents of earnings. So this is an $11.80 stock that pays an 80-cent dividend, which that trades cheap to its book value of 15. So it's a 30% total return, that it has a lower beta to the market than tech. So it's an interesting play. You know, bonus in $7. It's currently $11.80, and the upside is, my opinion, not financial advice, is kind of 15. And then this new one, which I'm going to be publishing a very in-depth report on my subscription product on specialsituationsresearch.com, is a company called Do Free, which is a monopoly concession play. When you go to an airport and you see like Hudson News or a fragrance or luxury store that's duty free, which is tax free, it's essentially a monopoly within the airport, because you have a specific 6-year contract with the airport to sell those goods to customers. You can sell those at like a very high gross profit. It's a 60% gross profit, and it's a very interesting play to invest in the recovery in Europe, because 44% of the airports that it is currently involved with are in Europe, 20% are in the US, 20% are in the Middle East and Asia, and the rest is LATAM. So it's well diversified. The US, we've been fortunate enough to be vaccinated, but in other parts of the world, they're still in process. So this company actually trades at a very reasonable valuation, actually trades at like 3 times forward EBITDA, which is kind of nuts thinking about, the cash flow this company can generate. When you look at Bloomberg or Cap IQ, their debt numbers are also incorrect because of an IFRS rule change in 2019 where you have to capitalize leases. So the actual debt number is probably 2/3 lower than what you can see on Bloomberg. So the free cash flow yield and EBITDA multiples are actually better than if you were just to look at your brokerage, which a lot of us don't have time to do the work. So it's trading at a 13% forward free cash flow yield, where its peers, which I enumerate in my subscription, trade at 5% free cash flow yields, which means it has the potential to double. And there's also some rumors that LVMH is looking to make an acquisition in the luxury concession store space, so it could be a takeout target as well. And because it's a European name, it hasn't seen this huge rally that U.S. stocks have seen because of the Fed buying between 120 and 300 billion securities per month. So it's a little bit insulated from that as well. So that's one that I'm actually focusing on right now.
Fascinating. And for anybody that's unfamiliar with Special, he's basically posting really quality content every single morning, usually straight from the Bloomberg, giving your own opinion, creating a whole perspective on these different, and very transparent with your trades as well. I appreciate you tagging me in most of this stuff, which is awesome. I'm curious for this coming week. I know that you were playing some option plays over the last couple of weeks. You had Upstart going. You had a lot of stuff going with Tell. Do you have any plays this upcoming week?
Sure. So, I tend to be a little bit more conservative. So when I do have a call option, it's something that I've actually done, 3 or 4 weeks of work on. And it tends to be a very small percentage of my portfolio. So, and when I do see a very high return, so I saw a 600% return on my Tell calls. And, when it comes to timing, I don't take credit for all that. A lot of that timing was luck, but if you paid attention to the CEO, he spoke publicly, he was recorded on video on numerous occasions. He hinted to it, and he is a very sharp guy, and I've known him for about 7 years. So, that I completely sold those calls for 600% profit. The equity, I sold about 15% at between $3.80 and $5.20, which for me on the common is over 120% return on a blended basis. Upstart I sold because I felt I really liked the business model, but the multiple expanded from like a 8 times revenue multiple to a 16 times revenue multiple. I still love the business. I would buy it back around 110 or below. I just think that a lot of this rally that we've seen, first of all, it shouldn't have fallen, into the 80s. But a lot of the rally that we've seen has been short covering, because I do know of some short funds that were using high revenue multiple stocks to play the Fed taper. So, I hope it continues to run, but if it doesn't, I would be a willing buyer. But in terms of options going forward, I'm actually not playing any options, any calls this week because of the fact that we have a CPI print coming out, and I wrote about this in my newsletter. We have a CPI print coming out on June 10th, which is, for those who don't know, it's Consumer Price Index. It's a basket of goods that is tracked, and the change in the prices of the basket of goods is essentially one measure of inflation. Now, everyone knows that CPI doesn't really track real inflation. It excludes food, energy, education, real estate, basically everything that matters. But, the Federal Reserve actually doesn't even use CPI. They use something called PCE, Personal Consumption Expenditures, which is even less volatile and excludes more things. But last month we saw the PPI, which is a forward-looking indicator. So when you think about goods going from point A to point B, when you have a commodity like iron ore, right? Iron ore prices have rallied quite a bit. They've been a little bit tamer because of China being more hawkish on its monetary policy. But iron ore is used in a blast furnace to melt with metallurgical coal to make steel. Okay, so iron ore and steel prices are at the beginning of a supply chain, and steel is sold to auto companies to essentially manufacture cars, and then we as consumers buy cars. Right? This is very simplified. So at the very beginning of the supply chain, you have iron ore and coal to make the steel. At the very end of the supply chain, you have finished goods. The process of going from point A to B takes 3 to 6 months. It can take, depending on the type of product. So when you have PPI and you see the price of goods at the beginning of the supply chain, there's often a delayed follow-through that takes a few months. So when we saw PPI numbers spike well above historical norms, there is a chance that this CPI is going to be worse than the CPI we saw last month, which is a 4.2% print. We could see above a 5% print. Now, tech stocks sold off because of that, and a lot of that has been priced in. Why do tech stocks sell off when that happens? It's for the reason that the market is assuming, whether it's right or wrong, that a higher inflation will result in the Fed tightening sooner, either by selling securities from its balance sheet or eventually raising rates. And that fear would cause yields to essentially rally, which would be worse for stocks that have long duration. What that means is long duration means that more of the value is coming from the future. So companies that have high growth with more of the revenues coming from the future forecast period. It's a similar concept as long bonds. Long bonds are more sensitive to interest rates than short bonds. So the idea is that if interest rates were to go up, the cost of capital or the discount rate that one would require for high growth names would be higher. Now, there are many interpretations, and in reality, interest rates would likely go up if we saw inflation rise, but if the Fed were to taper quickly, it would have the opposite effect. The economy would slow down very sharply, and rates would actually come in. So the actual result will depend on how gradual the Fed is in acting. But we have a view at my firm that, which is not financial advice, that the Fed will be very gradual and they'll let inflation run a little bit. And that is what's going to, create the forward perception of a taper, which could cause rates to rise in the near term, which could be bad for growth equities. But that would be temporary in nature. So again, this is just research. It doesn't mean things are going to play out that way. But it's I think that we put together good conceptual architecture of how things could play out. So I published in my last piece, the premium piece on my website, special6research.com, how different various asset classes could perform based on backtesting to changes in interest rates. And it's important to there's a difference between real rates and nominal interest rates. Real rates are more important for commodities like gold and silver because real rates adjust for inflation. So there's a lot going on there. I'm going to take a break here. Don't want to take anyone else's time.
Awesome. Appreciate the answer, the information. As always, I'm sure that there's a lot more that you can cover. Um, Hopefully, everybody gives your page a look, check some of that information out. But because some great points there on inflation, in your style with your calls and your option strategies. So appreciate that. All right, Luke, it is your time to shine. Coming up on 7K here, fresh out of work for today. Just for the weekend, and would love to hear what's been going on with you, man.
Yeah, thanks for having me. And I'd like, all these speakers have been absolutely fantastic. It's like, I swear, every single Friday that we have this, and every space, mostly every space that you have hosted, um, that's included these speakers and many more, the value you get is absolutely insane. Just a lot of great speakers. But either way, shifting into my week, it was really kind of just a week where I sat back and didn't make many moves. I kind of watched the choppy action, some bounces and growth, which I like to see. And then some positive news on Boeing, which is one of my core holdings. But really, just so everyone knows to lay it out, I'm very similar to stock market news. I'm a long term investor and I focus, on the long term. And I mostly invest in the big, blue chip names, the iconic names that have, really withstood the test of time over the course of the last 20, 30 years. So really taking a look at my week, I did have one move. About midweek, I added to my fintech position, so that's ARC F. And to explain that position, it's a newer position. It's very small compared to my other holdings. I wanted fintech exposure, but I didn't really want to pick out, specifically like have to decide between Square, PayPal, which are both fantastic companies. So I decided to just simply go with an ETF. And ARC's fintech ETF really just seemed to strike interest with me, especially in his top 5 holdings. You have Square, Shopify, CLTD, PayPal, Zillow, and so on, which are all very solid fintech companies. So I did add to ARC F. Besides that, I have been on the hunt for more inflation friendly names, some industrial plays, and possibly just more recovery plays. I feel like I could have used more of that in my portfolio. So I have been researching a few names there, such as Cleveland Cliffs Restoration Hardware. It's now known as RH, Home Depot, um, GE, Ford. Now, I think Ford and GM, if you really want to touch on those real quick, those have both been absolutely killing it on the back end of this week. So I'm a bit eerie to be jumping in on either of those right now. But if they pull back to a more reasonable value within the next few weeks, I might jump in on one of those too. Now, when it comes to touching on a few of the smaller names in my portfolio, one includes Pershing Square Tontine Holdings. It's a speculative position for me. It was the only SPAC that I partook in out of all the SPAC mania, simply because it really the format of it was much more retail investor friendly. Now the news we got on that lately has actually complicated a lot of retail investors. They find it confusing. And the deal it has a lot of different steps that's being proposed. So that would be interesting to see how that plays out. Not a too favorable of a reaction. But overall, I'm really eyeing inflation at the moment when it comes to my overall portfolio. And that's why I'm leaning more into those investor friendly, not investor friendly, but inflation friendly names. So really, I'll be looking at more the energy names, REITs. Those have historically been more inflation friendly. Some industrial plays, hence the research on GE, Raytheon. I mean, not Raytheon, yeah, Raytheon, and a few other names. But really, what it comes down to is if you're an investor and you're looking to build long-term wealth in the markets, it's all about that long-term mindset. If you really want something that's a little more passive and you're not always having to watch it like an absolute hawk. So the core of my portfolio, I always say build the foundation of your portfolio in those rock solid names. So, for example, your FANG names, your Apple, those type names, and then expand into the more riskier plays if you want to take on more risk, such as, say, a SPAC, or anything else, smaller names, lower market cap names. But that has really been my week. I'm still bullish on Boeing. I think over the next, I would say 12 months, that could easily push 300. I think that's conservative on a 12-month basis. But given the demand that's going to be coming out of China, they need something like 8,600 new aircraft over the next 10 to 20 years. And the Chinese have tended to love Boeing. But they have gotten a lot of upgrades this week, based on increasing travel numbers. And I believe that as the economy continues to recover, and it is slowly recovering, you will see a lot of those industrials and those more value names. They'll tend to push higher multiples. They'll tend to push higher valuations. That's just, there's cyclical plays. That's kind of just how the market has cycled over, if you look back. So yeah, that's been my week. Not too much going on. I'm using the inflation fear to my advantage and adding on the dips when it comes to growth. And then to round out my kind of all over week there, the semiconductors continue to strike my interest. So if any of you are interested, I continually write breakdowns. They're very simple, and it's basically a start. It's an article. It's a very simple article, and it breaks down the most recent earnings, and it summarizes companies in a very quick and simple fashion. And that is simply supposed to, in essence, get you started into your research on those companies. So runningwiththemoney.com, I just dropped a breakdown on ADI last night. That's the name I'm researching. NVIDIA is not in my portfolio, but I'm constantly looking at NVIDIA, Taiwan Semi. The list goes on. There's so many fantastic names. Marvell is also another one to check out if you're interested in more of the 5G semiconductor area. But that's really what I have been looking into. A lot of research this week, and not a lot of buying. And I guess we'll see if we get more opportunities next week. But my goal is to use the recent choppy action of the past few weeks and volatility of the past few weeks to my advantage, buying the dips and continue to add to those strong names that are going to continue to consistently grow and that have reliable management teams.
Love to see it. Great names that you just pointed out. I fully agree with Boeing. When you took a look at that 5-year chart, you can see they're still recovering. So many stocks made all-time highs. They're still recovering from that huge, huge drop off, during COVID. And they've been doing this kind of staircase that they're building, and they're looking like they're coming up on another leg of it. Just continuing to move back. And right before COVID started last February, they were at $340 a share, and they're still sitting at just 250. So I know that.
Yeah. And they were doing quite well prior to the crisis they had. And I kind of refer to, just quickly noting, I kind of have a thesis that sometimes I rely on, and it's an underdog thesis. And I really like looking for those companies, and Boeing fit the bill, that they've had issues. They've ran into a crisis recently, or they've ran into multiple crises, which Boeing did. First, it was the unfortunate crashes and those issues and regulation issues, and then it was COVID. But those underdog plays, these solid names that have ran into a lot of issues, and now they've made changes, for instance, management changes, and they're starting to get back on track. There's often a lot of catalyst in those recoveries that pushes the stock back to the upside. And there's a lot of profit to be made in those strong underdog plays. I like to call them underdog plays. It's just a nickname I gave them. Another one that's kind of similar, not the same industry, a different industry. Wells Fargo is also kind of an underdog play. They've had their issues over the past 5 to 6 years, and now they're starting to get their stuff back together and come back. But yeah, I 100% agree. Boeing is definitely a long-term hold for me. And they're pretty much, if you're a big airline, you're either going to Airbus or Boeing at this point. And I think it's only going to continue to be like that. And I think they see outsized demand in 2022 and 2023, especially from China.
Love it, Luke. Appreciate you coming on.
I would say one thing, buddy.
I was just going to go to you. I was actually going to say, do you want to give us a few minutes?
Yeah, definitely, man. Especially you got some heavy hitters up here, man. I'm going to add to Luke what you were speaking about when it comes to civil aviation markets. So India also is growing quite extensively in the civil aviation market, my friend. Adani, he is a well-known name in India. So he's been investing heavily into the airports from the private side. Boeing and Airbus, of course, they're the two largest manufacturers of airplanes on the civilian side of the equation. I would say one thing, okay? Airbus is also making some leaps in, especially in the regional markets. China is actually manufacturing or trying to manufacture their own planes. I believe the company's name is Comac. That is just something to just keep in mind. They've been reducing their
Yep.
Airbus as well as Boeing orders, especially on their larger aircraft, for whatever the reason is for the time being. But Boeing is heavy
Yeah.
topside. There's no doubt about that, even with their new F-15s that they've come out with, on top of their partnership with Huntington Ingalls, with UUVs. They're basically their new FX trainer that they have in a partnership with Saab, or excuse me, TX trainer. That will be used to replace the T-38s that they use for the Air Force. They're called, I believe, Red Hawks or something of that nature. Boeing has those hurdles, like you were saying. GE is a name I would also tie into this. GE, with their partnership even with Safran. Those LEAP engines that they have are definitely competitive with Pratt & Whitney as well as Rolls-Royce. The defense sector is definitely hasn't taken as much of a gain as a lot of the other industrials. I would focus on also mid caps. You have a lot of great companies, Aerojet Rocketdyne. I believe Lockheed Martin is trying to acquire them for about $3.2 billion. You, of course, have the joint partnership of Raytheon and United Technologies. What I see in this space and why I'm saying to focus on small caps and mid caps. You're seeing the bigger companies come and acquire these smaller ones that are used in the maintenance, the upkeep, and as well as the other types of equipment that are required for their larger equipment that they sell to the public sector, mainly the Defense Department. On the civilian side, I would tell you Airbus is making leaps and bounds in the mid market, if you want to call it, for those middle market jets. The A220s that even Delta just purchased. United, Delta, and American have actually been going more and shifting towards Airbus. So EADS is a definite name to also pay attention to, which Airbus is one of the companies, right, that is under EADS. I would also say, SpaceX with what it's doing, they're going to be getting contracts, but Lockheed and Boeing, okay, their United Launch Alliance, they'll be getting more contracts, especially with Space Force expanding. So I see that as a niche in the market pertaining to the cargo that's required by different companies, whether it be satellites or, the cargo they need to take to the International Space Station. I would just add that into there.
Awesome.
Yeah, and I just one quick note. I thank you for bringing all that information in. And I don't want to I am definitely with you on the fact that Airbus is an insanely solid competitor. And there's a lot of good stuff happening all over the aerospace industry and defense industry that I think people really are just not looking at the moment. And I think we both agree on that. And I think that's, part of the reason you haven't seen those names move as much. So there's definitely a lot of opportunity there. Boeing definitely still has a lot of work to do. And there's definitely risk to the stock as well. So definitely, I was 100% with you on that. A lot of positives, a lot of negatives.
But I think the positives outweigh. I can't disagree with you on that. Boeing has too many smart people that work for that company, even along with their partnership with Sikorsky on the new helicopters that they're coming out with. Sikorsky, of course, is a division of Lockheed Martin, right? So I think they have a lot of good stuff, both of them do. There's two good ETFs, in case somebody didn't want to be selective, that are more focused on the multi-cap, right? The mid caps and the small caps. XAR and PPA. One's a State Street, and the other one is a Invesco. ITA is the biggest. That's a BlackRock or iShares fund. It has more large cap weighting, so that's just something to keep in mind. If you think about it, with the market recovery going back into last year, mid caps in general, they recovered faster than the large caps, and even the small cap rally definitely overseeded both of them. So,
yeah, and on one final note here, one last second. What really pushed me towards Boeing when it came to picking was, you can get exposure to any other name that you want. And there's a lot of fantastic companies, as we've both noted. But I really leaned towards Boeing, not only because I think that they're working on that comeback. And as you said, they have a ton of smart people over there, but they're an American company. And I really like investing in American companies. And that's really was one of the slight highlights. It wasn't even a main factor, but it was a slight highlight that pushed me over there to Boeing.
I know it started with seaplanes, right?
Something like that.
Cool, awesome. Thanks, guys. Appreciate that discourse on that. I do have to wrap up, but before we do go, I want to give each one of my speakers that came on today just a chance to, if there's anything else you'd like to say, just like 1 minute to put it out there. So, Stock Market News. First off, congrats. You're going to get to 100K soon, which is awesome. Love to see the journey. Anything else you'd like to share?
I appreciate you, man. I was kind of hoping I'd go last. I was trying to think of something on the spot. I don't really got much, guys. Enjoy your weekend, everybody. Take the break. Take the break. It's been getting crazy with the market recently, so nice to take a step back sometimes. I appreciate the 100K mention. I've been working for it. But, hey, listen, I've been kind of like I'm a very competitive person, and I've been doing a little bit of an internal competition against Greg, trying to beat him to 100K, and I'm going to lose. So we'll see how that comes out, and still some time. But I appreciate the call, everybody. Wolf, great time.
Yeah, always. Appreciate you coming on. All right, Nat.
Yeah, thanks. I don't really have anything. Just check out the website, check out the podcast, contrarianpod.com. Send me any feedback. Follow me on Twitter. Love hearing from people. And email is contrarianpod@gmail.com, but I accept DMs as well. I believe those are open. So look forward to hearing from people. Thanks, Wolf, for having me on. A lot of good fun. And thanks all for listening.
Yeah, appreciate you doing your first space with us. Shark?
Yeah, thanks for having me. I know I trade a little bit differently. If anyone has any questions, feel free to reach out. I'm always interested in helping anybody. And I'm looking forward to sharing more. And just, thanks for having me again. And make sure everyone follows all these speakers here. They had some fire content, and I went ahead and followed them all, and I can't wait to see what everyone's saying.
100%. I'm excited for our Monday night call. Luke?
Yeah, I would just round out by saying, I enjoyed coming on. Thank you for having me. To everyone in the space, go and follow the speakers. All fantastic. Definitely just amazing information in this space. And I push it at the end of every space I do. To any newer investors in here, do the research before investing. Don't research after. And it doesn't have to be like super crazy, like research, just know the fundamentals behind the company you're investing in. Either way, have a great weekend. And let's chill out and relax and prepare for the next week of opportunities.
And special, Jay.
Hey, thanks guys for your time. Again, check out the website, specialistresearch.com. I saw Luke, mention, everyone here is putting in time, to share insights with you. So definitely give everyone a follow. Also heard Luke mention, PSCH, Ackman's SPAC. I did write, something very brief on my Twitter about it. I didn't have any position because I invested along Ackman back in the day, and I wrote about how he essentially lost $6 billion in 2 trades, and he's had over 10 very, very wild mishaps that you should just read up on him, learn a little bit about his investing history. He kind of bailed himself out with GGP, but I won't dwell on it here. In terms of the business itself, UMG was a good business, but I think the reason why it traded closer to NAV was the price they paid. So you're paying a premium on top of a premium. You're essentially paying a 30% premium to what Tencent paid last year, and then you're paying another 25% premium on top of that at the market price of $25 a share. I think the interesting thing, not to dwell on the negatives, is that there's still $1.5 billion of cash to deploy in something that is more reasonably valued. I think Ekman got himself in a tough spot by raising too much money, realized that he would have to pay a large premium for such a large asset, and he actually owns a very small piece, so I don't know how he can really add value and turn it around. But if you guys are interested in more information on that, check out my Twitter.
100%. And just for everybody listening, I know I'm behind the face of the Wolf. Wolf Financial is the company that I work for. My name is Gav Blacksberg, and I am the COO and the voice of Wolf Financial. My full-time job is literally being on the internet, running spaces, connecting with people, bringing people together. I promise to continue to bring value. I already have multiple spaces planned for next week, including on Monday night, I'm going to have a technical analysis theme space. Shark's going to be on that. Pattern Profits is going to be on that, and a couple of others. On Tuesday night, I'm working really hard on this. I'm trying to get a space with the hosts of the Pennies Going In Raw podcast. That's Hugh Henney and Dan Didi of Dips. Those guys, I've been chatting with Hugh Henney. It's on the calendar. We're going to be chatting a little bit about their background. They're the #1 rated finance podcast on Spotify. And then in addition to that, there's just going to be a bunch more spaces coming. I'm always trying to put out podcast content and just trying to bring this community together. You'll catch me on late night spaces with Greg, good friend of mine, Matt Esparza, a bunch of others. That's really all that I have, for today. I don't want to take too much time on anyone's Fridays.
Can I just add one thing, buddy?
Yeah, what's up, Craig?
Sometimes your mom's listening, man. So just make sure you guys realize that.
Yeah, I'm sure my mother and many others. My mother's not in the crowd today, but she does come on to many of mine, check them out. I think she's got notifications on for me, I'm pretty sure. So I'm always happy with what she's fine with whatever I'm saying, and we're all just out here really trying to point ourselves in the right direction financially, make some money, set ourselves up for success. But for me, it's all about, the balance of success and happiness, because what is one without the other? So appreciate everybody's time. Have a fantastic weekend. Take care, y'all.
You too.